We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Simon Mikhailovich, long-term investor, entrepreneur, and founder of the Bullion Reserve and Bullion Source. Simon, thanks for joining me again. How are you?
I'm very well. Thank you for having me.
It's great to speak with you again, Simon. And this is the first interview for me in the new year here. And I want to try and take a step back and think about things through first principles. You and I had a little bit of a discourse here this morning before we started recording. And you shared with me that really the levels of uncertainty and complexity are so high right now that making any forecast is a bit of a fool's errand. So, when I meet anybody and I try to explain to them what the podcast is about, I try to give a simple explanation on the subject of being precious metals. And then it kind of, evolves into precious metals, commodities, and economics. And then that obviously ends up kind of leading into geopolitics, trade, and monetary matters as well. So how do you think all of these subjects fit together?
Well, in terms of precious metals, that's easy because, it's easy and it depends on how one views precious metals. To the extent one is speculating in precious metals, that would be no different from speculating in pork bellies or, copper or any other commodity. And then, of course, market has its own ideas as to what the drivers are. So, for example, for the past 30, 40 years, interest rates have been significant, or real interest rates, I should say, have been significant driver of demand for gold exposure. And that is connected with the idea that I'm indifferent between holding gold and, let's say, treasuries, because there's no credit risk. And therefore, I would hold whatever instrument or more attractive is whatever instrument where I can get a better current yield, right? So, but the assumption there is that there's no credit risk and that there's no sovereign risk, currency risk, and other types of risk. So in that type of framework, certain demand and supply drivers work. But as a reserve asset, as the only liquid, globally neutral reserve asset, demand for gold has different parameters. So, for example, because gold is the only financial asset that is nobody's promise, i.e. it has no counterparty, it does not rely on anybody fulfilling any kind of obligation, which is true for absolutely every financial asset, be it a stock, bond, derivative contract, receivables, whatever it is. Demand for a reserve asset with such a property, it makes sense that it would rise when confidence or trust in other people's promises declines, right? And so that's the direct connection to the questions like property rights, geopolitics, politics, domestic political stability. In other words, demand for gold is inversely correlated to confidence. And confidence can be shaken for all of the reasons you've just mentioned, whether they're financial, monetary, political, geopolitical, war, and so forth. And so in that sense, it makes perfect sense that discussing gold and demand for it and who is demanding it and why, and who are the buyers and who are the sellers and why are they doing it, makes perfect sense, and it all ties it all together. Because in a way, it's a solution to certain problems, and then you need to understand the problems and their potential path to understand what is the potential demand for this product that has these particular, very unique properties.
Mm-hmm. So, something else that we kind of touched on was the idea of the fourth turning. So what part of that cycle are we in at that point, and what comes after this part of the cycle?
Well, I think it's important to take, you can't really imagine where you're going, or where you might be going, without some level of understanding of where you are and how you got here, and what are the problems that exist today? Are these problems existential, or can they be overcome fairly easily? And who are the winners and the losers of these problems? Because, in financial matters, usually everybody is not a loser. Somebody is a winner, somebody is a loser. And so if we look, if I may take just a couple of minutes to talk about this, because I think it's important, and that kind of ties together the geopolitics, economics, monetary matters, trade, globalization, politics. And I would say politics actually in this is it could be a driver of things, but it's more of a symptom of other problems that are more fundamental. And so if we look at where we are, and you and I have had these conversations before, and honestly, the situation has not changed that much, other than certain parts of these problems are reaching critical mass, not on our initiative, not because we are pushing them, but other people are pushing them. And so if you look at all this, you can step back and you can say that we're in a situation as a result of the post-World War I and post-World War II arrangements in which the collective West, particularly the Anglosphere of the collective West, the United States, Great Britain, and the Allies, have prevailed. And as a result of that, the United States, after World War II, came out as the hegemonic co-superpower with the Soviet Union. But on an economic and monetary basis, it was the solitary hegemonic superpower, because the Soviet Union was not integrated into the global economy and was not integrated into the global monetary system. And of course, coming out of World War II, all of the competing economies had been destroyed. And so the United States came out as the most powerful and militarily, and obviously the most undisturbed, if you will, industrial base. And took the lead, and within 10, 20 years achieved complete superiority over everybody, largest global economy. The United States was the largest creditor nation at that time. And that has propelled the United States towards the 70s, when trouble started, even in the 60s. And the United States has abrogated its obligations to the international community, in that it went off the gold standard, whereby otherwise it was running deficits, and these deficits were being monetized by other countries in gold. And so we were running out of gold. We ended World War II with 22,000 tons of gold reserves. And by 1971, when Nixon went off the gold standard, we were down to, I forgot what it is exactly, 8,800 or something like that. You can see that it's basically a 2/3 decline in our gold reserves, and they were on the way down. So then, if you look forward, 70s were tumultuous. The dollar has been devalued dramatically during that period of time. And then starting from 1982, and you can look at all the charts, you can see the buildup of debt. So that was the beginning of financialization, which I would define as a optimization of the real economy around finance and asset prices. And along with financialization, there was a phenomenon of globalization, where that started in the 90s, particularly after the collapse of the Soviet Union, where the United States was left as the sole hegemonic superpower, both in the military sense and economic and financial sense, full field domination. And so the United States was able to subsidize its growth, and we can talk about that in a second, with credit, with debt. And you can see that, for example, over the past 40 years, U.S. debt to GDP ratio, I believe, quadrupled, and the private debt to GDP ratio doubled. And we know that when debt to GDP ratio is an indication of leverage. And that assumes the GDP itself is telling you what you think it's telling you. And what everybody thinks it's telling us is whether the economy, the U.S. economy, U.S. GDP is growing or contracting. But then again, what is GDP? Well, GDP is a formula in which government spending is a major component, one of only 4 components. And what is government spending? I mean, we've been running deficit. Let's just take since COVID, like the last 5 years. We've run, I just averaged it out. Of course, it includes a huge decline of GDP during COVID, but we've been running like 9% deficit to GDP ratio, whereas the growth of GDP has been, on average, for the same 5 years, under 3%. And of course, the other number that comes into play here is inflation, because this is supposedly real growth after inflation. So you can see that if you understate inflation, if the real inflation is understated, then perhaps this growth is even less. This contraction is even more. The reason I say construction is because if you're running average, 9%, like last year was 6-something% to GDP, and the growth is like 3%. So where's the other, basically subtract. So maybe you're contracting at 3% if you were not printing this money and borrowing it from the Fed. Mm-hmm. Like that's what would have been happening. So in other words, this is what Mises defined as, or described as, credit-driven boom. It's a credit-driven boom. So if it's a credit-driven boom, what happens if we can no longer grow credit? I mean, just think about that. And what we've learned in the last year or two is that a lot of these things that we're hearing are not necessarily true. Like, we know that the job numbers last year weren't exactly true when they were reported, because they've been subsequently revised by, millions. We know, most people know from lived experience, that 2 to 3% inflation or 3 to 4% inflation is not really true. Because when we go to the supermarket and we go to buy anything, or restaurants or travel, I mean, we can see that. Or if you live in a condominium and the condo fees, or if you live in a cooperative or whatever, you can see your property taxes, your condo fees, your costs, if plumbers and all that kind of stuff. It's just going up way more than 2-3%. So then, so that's not true. So I guess where I'm leading with all that is to say that we don't really know where we are. And Jay Powell keeps telling us this. I mean, he's not actually hiding any of this. I think he said, like last year, that we were trying to navigate by the stars under cloud cover, or he used some phrase like that, which is to say you're trying to navigate by beacons that you cannot see. In other words, you're lost. And this past December, like a few weeks ago, he said something, I forgot, like we're trying to avoid furniture in the dark room, or some other kind of line like this, he said in his interview. These are all the same ideas. This is all different ways to say the same thing. Is we are in the middle of complete uncertainty. We do not have a chart to anchor our position so that we can know where exactly we are and what is around us and in which direction we're heading. But it's been so good for so long. All financial assets are still near despite the recent, small hiccup, they're still just, near their all-time highs. The dollar is as high as it's been in many years, as measured by DXY, which is another thing. Everybody says the dollar is strong. The dollar is strong. Like, strong versus what? Like, it's not strong versus gold, let's say, but it's strong versus euro. Yeah, for sure. Because what is DXY? When they say gold is strong, means the DXY is high. What is DXY? It's 60% euro, and then it's British pound, yen, and some minute amount of Canadian dollars and Swiss francs. So, strong is a relative notion, and all of those are fiat currencies as well. So it's like, what is that saying from the 2008s? The cleanest dirty shirt. Uh-huh. Okay, well, at some point, the cleanest dirty shirt gets pretty dirty itself. So, it's all relative, right? Rags are better than going naked, but it's not necessarily a good thing. At some point, maybe they fall apart. So all of those things taken together, we've had financialization, we've had credit-driven boom, we've been exporting our inflation to other countries. Globalization has enabled corporate earnings to soar because corporations were selling to American consumers, and were manufacturing things in countries where labor was extremely cheap. The U.S. Military hegemony ensured that supply routes were safe and cost efficient. Ships could sail without impediment. There were no issues. And so it was, in a sense, a virtuous machine for some people. I say for some people because who are the winners? Who have been the winners and losers in this? So tactically, Wall Street investors, asset owners, politicians who derive campaign contributions from these people who own assets and money. Of course, technology, because of the genuine boom in that area, have created tremendous wealth. But that's just one area. That's just one industry. I mean, we're talking about macro picture of the economy as a whole. So tactically, people with money have been winning, and working people have been losing because their jobs have been shipped ashore. And then while people with assets, because of this asset inflation and money printing, all assets are to this, all risk assets particularly are into the stratosphere. And so their balance sheets, at least on paper, have been looking better and better and better. And so what's the incentive for anybody who has any control over what's going on to change it? None whatsoever. I mean, it works great. Let's just roll it until we can't anymore. Mm-hmm. Now, who have been the losers? So the losers on the American side have been working people, but globally, tactical winners. Let's say China was a tactical winner for a while, a strategic winner for a while, because they have rebuilt they're not rebuilt. They've built a massive industrial base out of this arrangement. Mm-hmm. But there comes a point where you make somebody rich and then they don't want to listen to you. They don't want to take your directions. Mm-hmm. It's just like in companies. It's like in a lot of, one of the partners succeeds beyond all his dreams, and then he wants to go and build his own company. He doesn't want to listen to the old CEO anymore. I mean, he's like, I don't need to listen to you. I have my own money. What do they call it? FU money. So China got FU money. Of course, they're still intertwined with the United States and they depend on the US demand and all that, but they now have the means and desire to want something different. Russia, that's been completely decimated after the 1990s, took 30 years, but eventually decided that it no longer wanted to be squeezed by NATO and by the United States. And essentially in 2021, in December, they gave the US an ultimatum that I don't think we took very seriously. And they said either renegotiate European security arrangements or prepare for war. We didn't react. War ensued. Whatever the progress, the back and forth of that war has been, the bottom line is it has completely destabilized the post-World War II and post-World War I. And the reason I keep mentioning World War I is because the borders in the Middle East have been drawn after World War I. And they have been drawn arbitrarily. And what we're seeing now in the Middle East and potentially moving around the world is that the borders that were sacrosanct for for 110 years, or for 100 some years after 2019, 2020, whenever they got drawn after World War II, after World War I, after the Ottoman Empire fell apart, are coming into question and are becoming no longer inviolable and are being challenged. We see that the Bab el-Mandeb Strait, that is a pathway to Suez Canal. I just saw, I don't remember the exact number, but the traffic through Suez Canal is down by, by half or 60% or 40% or something like that, which is massive, because the navigation cannot be accomplished safely. So a lot of the traffic is now going around Africa. That's adding tremendous costs. That's inflationary. And so this world order that we created and that was very beneficial for investors is now being tested and challenged around the world through geopolitical means, through military means, and through many means which we don't know, which is very important to understand. Like, we don't know, we suspect who blew up Nord Stream, let's say, but we don't know for a fact. Somebody in the last month only cut 3 underwater cables across the Baltic. I mean, this is internet, communications, everything, right? China is being accused, Russia is being accused. There's a Russian ship that's detained on suspicion of cutting this cable. But this is basically warfare. This is sabotage. I mean, these are the kinds of things that are happening off radar. And there are many other, and I have no it's not a conspiracy theory, it's just these things are happening. We don't know whether some of these things are accidents, whether some of the terrorist attacks we're observing around the United States, are these isolated incidents or somebody's behind it? I mean, I don't know. I'm not suggesting anything. I'm just saying we're seeing high level of activity of the sort that we have not seen in generations. And this activity makes sense in the context of the geopolitical tensions that are going on around the world, that are erupting now into open warfare. Who could have thought who predicted in 2024 that Iran and Israel would be exchanging live ammunition from hundreds of miles away, firing rockets at each other? Mm-hmm. Who could have predicted that Joe Biden would not be on the ticket? Who could have predicted that the German and French government would fall in no confidence votes, or that South Korean government or South Korean president would declare martial law? The crisis I don't quite understand, but now they're trying to arrest him, and apparently some military is resisting. I mean, this is like Banana Republic stuff, in countries that are not supposedly banana republics. Romanian High Court canceled the results of the first round of the presidential. It just canceled them because they didn't like who came first. Mm-hmm. Because the guy who came first wanted to stop a war with Russia, so they canceled it. In Georgia, which is not Georgia, Atlanta, Georgia, Tbilisi, Georgia, there was also a parliamentary election where a party won that stood for closer ties with Russia. The sitting president did not accept the elections. An attempted color revolution ensued, and now things have quieted down. A new president was elected to replace the old one, who is in the same side as the cabinet. But we don't know how these things play out. I mean, what I'm saying is that there are things going on, there are events going on around the world where it's very difficult to predict which way these things break. And now we have the incoming Trump administration that has made fabulous promises of a lot of things. We know what they promised to do. We don't know which of those promises they can actually fulfill. I'm quoting, in saying this, I'm paraphrasing what Michael Weeks of Edelweiss Holdings recently, sort of the way he put it, which I think was very correct. He basically said, we know what they promised. We have no idea which of what they promised, which actual policies they will try to implement and will be able to implement. Mm-hmm. We don't know what the implications of these policies will actually be in real life. We don't know what unintended consequences will be of these things. Neither do we know what second or third order effects might be of things like tariffs. I mean, is that going to be inflationary? Are they going to elicit trade wars and currency wars from other side? It's like we're not the only ones here. And so everything that I'm saying can be summed up that we didn't happen onto the situation by accident. Our financial system is completely reliant on continuing growing of debt. Completely. The ability of the United States to fund its government is completely reliant on the ability to continue to borrow and to pay interest on this borrowing. Everybody knows that. I mean, this is not in dispute. What's in dispute is whether this is status quo that can continue indefinitely, or whether it's not status quo that can continue indefinitely. Okay, that's what's in dispute. So my point is that taking for granted one or the other is simply gambling. Mm-hmm. I mean, it's what it is. It's just gambling. I mean, you want to put on red? Great. You want to put no, and the other people think on black? Fine. But it seems like mostly people are putting on red. So the table is almost ready to tilt from all the red bets, and very few people are in black.
Mhm.
And so, because very few people think that this status quo can be disrupted. And I think that the chance of disruption is extremely high. It's, or at least it doesn't mean that it will happen, but it's as high as it has ever been, perhaps ever in the history of the United States, and it's certainly as high as it has been in our lifetimes.
Mhm.
And so, taking for granted that it's all good uh, is unwise, in my opinion, because of the overall situation. Go ahead.
Right. To your point there, Simon, about the policies that Trump is, laying out, I think one of the best sayings that I've heard about that is to take him seriously, but not literally. And I think that that's the right framework to kind of understand a lot of these tweets, a lot of these ideas that are being thrown out. And to your other point about the amount of news, the amount of happenings around the world, almost in every single country, I feel like in a lot of ways, society itself has become numb to this because we're just constantly surrounded and bombarded by this information 24/7 that we've just become accustomed to. Oh yeah, that color revolution is happening and martial law is being declared over there, and that undergirds this entire level of uncertainty, I think, around the world, which you touched on. But Simon, you also mentioned this idea of winners and losers around the world. Why do you think the most dangerous scenario, let's say for America, would be this grand coalition of Russia and China?
Well, this wouldn't be a problem, but for our debt issue. So the only way, this is where it all comes together. If you're yourself fragile, then your ability to withstand adversity is materially reduced. So the fragility of our situation arises out of our financial position. And let's just set for aside, I'm not an expert in military affairs.
Mhm.
Let's just set aside whether militarily we are better or matched or whatever. But just financially, yes, the dollar is the preeminent currency. Yes, it's the easiest to transact. Yes, that's all true. But at the same time, it's also true that after 2022, and the freezing of the Russian sovereign reserves, and the confiscation of private assets of many Russian oligarchs and just the rich people, the non-Westerners. This is the difference between what's happening inside the West and outside the West, right? Inside the West is 1 billion people. The rest of the people are outside. A level of confidence in the United States as a trusted counterparty, as a superpower that is capable of protecting any country against any other country. I'm referring to Ukraine, which we have spent, just the United States has now allocated, I think, $160 billion, $170 billion. That's not counting the EU. That just for scale is more in today's dollars than the Marshall Plan, which after World War II helped rebuild 18 European countries. Okay? So all that money has been spent and essentially either stolen, or let's say it hasn't been stolen, it's all been fired into munitions.
Mhm.
Just blew up. So there's nothing to show for it because there's no success. So that gives people pause outside the Western sphere of influence. Like, can the United States actually defend you if you're attacked by somebody else? And then on the financial front, if you store your surplus reserves in dollars, is it possible that if you find yourself in a conflict, supporting or not wanting to sanction Russia or China or whatever, does that mean your reserves might get confiscated or frozen? So that has caused what I call a confidence gap between the West and the rest. And this confidence gap has not yet been seen in the West for the reasons, like you're saying, yeah, it's happening somewhere, but it hasn't affected me directly. And furthermore, everybody's lived experience has been that when bad things happen, we quickly bounce back. The government comes in, plugs all the holes, and everything is made good again. You know, in other words, buy the dip. Every time there's a dip, you should buy it because things are going higher. You know, so that sort of mentality is very indicative of the period of this financialization, of credit growth, of bailouts. It's not capitalism. I mean, capitalist system is a pretty harsh system. I mean, it's effective over time, but it's pretty harsh. I mean, you fail, and if you win, you deserve to become very, very wealthy. But if you fail, you deserve to lose your money. But when you deserve to keep your money, when you fail, and you deserve a lot of money in all other circumstances, that creates a very unbalanced, very unrealistic view of the world. And that's where we are. And by the way, just going directly to that point, we're seeing a complete, what's the way to describe it, a gap in consistency between gold demand inside the West and outside the West. I mean, just this morning, I saw that gold ETFs, gold-backed ETFs, have shed inventory, means their net outflows, for the fourth year running. So think about it. And I did some numbers on that. So for the past 3 or 4 years, gold ETFs have shed 20%. Like today, through last week of December, I looked it up last week. Through the last week of December, from the beginning of the war in Ukraine, from like April, when holdings peaked, Western ETFs, so European and North American ETFs, have shed 20% of their gold, and gold price is up 4%. And depends how you count it, could be more than 40%. How's that possible? I mean, price goes up when demand goes up, right? So net demand for gold is up, even though the West is selling gold. So this speaks to a complete cognitive dissonance between perception of people outside the West and central banks, primarily, who are the drivers of this, the largest drivers of this on the margin, and the Western investors. Okay, well, people can say they don't know what they're doing. That's fine. Although I would say that Chinese and Russians have been accused of a lot of very bad things, but nobody has ever accused them of being stupid. And they aren't. And so this is a huge gap. It's also a huge opportunity, obviously, because, as I mentioned to you before we started, the largest opportunities arise out of the largest gaps between perception and reality, or expectations and reality, if you will, like now, like where we are right now. So that's where we are, and that's why I think people in the West are not reacting or not acting. They're speculating. Risk assets, again, like I said, are near all-time highs. Fartcoin is $1 billion, whatever, market cap, if you want to call it that. I mean, what could be more indicative than something called Fartcoin experiencing the kind of boom that it is? Like, for what reason? I guess farts are valuable. I don't know.
So, Simon, what do you think it means for China and, let's say, the East to be buying so much gold as really a signal for the rest of the world?
It's a confidence issue. It's a confidence issue. It's in a loss of confidence. Gold has always, for very easily understandable reasons, gold has always becomes in high demand. Because when people, I mean, it's a natural thing. If you own something that is depreciating in value, you want to get rid of it, or that you believe is going to keep depreciating in value. It's a natural thing to want to divest it, to want to sell it. The question is, what do you sell it for? And so, what I said in the beginning of this conversation is that gold is the only financial asset. By financial asset, I mean it's a part of the banking system. It's the third largest, third most held reserve currency by central banks. Now, people can deny it, they can ignore it, but that's a fact. Okay, that's a fact. And the reason they hold it is because gold is liquid in its own right, and that's very important to understand. When we talk about liquidity, we're talking about ability to exchange something for currency at a fair price. Okay, so the most liquid asset, the more liquid the asset, the less of a liquidity discount or illiquidity discount there is. So if you can immediately exchange something for currency at a fair price, basically at a stated price in large amounts, that's considered very liquid. But you see, gold in a pinch has its own liquidity because it can be accepted in settlement of obligations by itself. It is negotiable. It is the most negotiable instrument without having to convert it to currency when that is not an option or when that is undesirable. And so that is why the decline in confidence always is inversely correlated to demand for gold. So what we're seeing, the reason China and others are loading up on gold, central banks are loading up on gold, because they envision that there would be inevitably, because of the unsustainable financial path that the United States is on. Everybody, like I said, I don't think anybody agrees that it's sustainable. They just think it can be sustained for a long time because it has been sustained for a long time. In a crisis of confidence, people would value either those currencies that can be backed with gold, or borrowing that can be backed with gold, or some sort of a financial instruments that can be collateralized with gold, something that cannot be printed, something that's scarce, something that's completely independent, and something that's indestructible. It doesn't need electricity, it doesn't need air conditioning, it doesn't need anything. And so there's no validation network. There's no, and this is not an argument against Bitcoin. This is simply, or cryptocurrencies. This is simply to say that cryptocurrencies and financial instruments, digital financial instruments, exist in an ecosphere that is not independent. It is dependent on supply of electricity, on access to internet services, on internet service providers, and so on and so forth. Hardware, software, incentives for the mining or the transaction validation industry that pay for the electricity and so forth. It's a business in a way that exists independently, but it is not entirely independent from the system. And gold is the only asset that is. And so that's why they're buying it, because it's not something the United States can confiscate or arrest if it's sitting in their vaults. The only way to get it is to send in the Marines physically, which would be difficult in Moscow or Beijing for the Marines to take the gold. Also very heavy. Very difficult to move. Mm-hmm. So, it's not like you can't do a cyber attack or anything like that.
Do you think that it's an interesting paradox, let's say, that Trump is threatening countries that don't want to use the US dollar with tariffs versus, supporting the cryptocurrency industry, which is, at its core, an alternative to the US dollar?
Well, like you said, it's not what Trump says exactly, it's what he's talking about, right? So is it what he means in general, right? What his intentions are in general. Well, I'm sure Luke Groman and Luke's thinking about that. I mean, it's possible that there's no paradox at all. It's very possible that the United States wants to use Bitcoin or crypto industry as a sort of the digital dollar instead of the instead of issuing the CBDC that for which there's a tremendous political pushback. So maybe this is a backdoor to monetizing U.S. debt, because we know that Tether buys a lot of, what is one of the largest, Tether and other stable coins, and one of the largest holders of treasury bills. So maybe spurring a rally in the price of digital assets is a way to increase demand for U.S. Debt securities. I don't know. Well, I guess the paradox here is for sure is as follows: it cannot be true that these instruments, and I'm talking about digital currencies or digital assets, are independent from the U.S. government, or will continue to be independent from the U.S. government, if the U.S. government sets out on the policy of making these instruments, these markets, and this infrastructure a cornerstone of the U.S. financial policies. I mean, that's just not that's not compatible to each other. And so, if you're interested in higher price, then that may be a signal that the price is going higher. If you're interested in independence from the dollar and the U.S. government, then maybe this is not the signal you should be looking for. And the fact that the crypto community is cheering this on probably tells us more about the real objectives, which is profits in fiat terms, than in any kind of libertarian or political or ideological objectives to the tyranny of fiat currency and the fiat currency system. Mm-hmm. That would be my answer to that.
So, because of all of the uncertainty that we've spoken about and really touched on here, Simon, does that make gold, as you said, this it creates this gap of confidence as well as this gap of demand for gold in the West at the present time? Like, does that make gold the ultimate solution to this uncertainty?
No, I think what you said is it creates demand for gold. It is not creating demand for gold in the West. Mm-hmm. It's the hubris that's not creating demand for gold in the West. It's first there was the rising interest rates from 22, but then all correlations broke because American and the North American, I should say, and Western European investors have been selling gold, and gold price has been going up anyway. They have been acting, Western investors, in a way that would have sent gold down tremendously in the past, right? And instead, it keeps rising. So what I'm saying is there's a difference of opinion. There's a significant difference of opinion. And it's not a difference of opinion like it would be, let's say, in high-yield bonds or some other instrument that's strictly the purview of the Western markets. Because who would be on the other side if Western investors didn't like high-yield bonds? Like, who is there on the other side to buy up everything they don't want and buy even more? So gold, in that sense, is unique monetary asset where there's a disagreement. The West doesn't like it. They're divesting, net divesting. So in other words, net selling. But the other side is not only buying everything that the West has to sell, Western investors have to sell. They're buying all the new production, and they're buying enough to get the price up 40%. So I think if you're thinking about it in insurance terms, insurance pays out. The point of insurance is that it pays out when something happens, right? In 2006, in 2005, in 2007 early, you could buy insurance on subprime bonds for nothing because everybody thought nothing was going to happen. For nothing, basis points on something that paid out, in dollars. Not cents on the dollar, basis points on the dollar, fractions of a cent on the dollar. And so I believe that we are in a similar situation versus gold. Now, I'm not predicting a massive, I have no idea what the fiat price of gold would be. We don't know what kind of, one thing about Trump is we don't know what they're going to do, what this administration is going to do. I would not surprise me if they devalue the dollar. It would not surprise me if the United States actually spearheads some sort of a development that would be extremely adversarial or extremely adverse to the holders of financial assets because of strategic imperatives of war, contingencies of war. This morning, I read that Biden administration Actually, not the Biden administration, Biden himself, well, whoever is acting in the name of the president, uh, prevented a sale of a U.S. steel company to Nippon Steel for strategic reasons. And this is an ally. Japan is an ally. This is a Japanese company. So what we're seeing is geopolitical, geostrategic priorities may intervene over financial priorities, over market priorities, because up to now, holding up asset prices has been job number one and job number last. Everything boiled down to that. So one of the points I'm making is that we are now in an environment where that is not the only consideration. Okay? And in fact, it is probably the further we go down the path that we're on geopolitically, the less of a first consideration it will be. And so this is where surprise may come from outside the United States. It may also come from inside the United States, because politics and geopolitics are becoming superior to pure immediate tactical economic considerations and tactical financial considerations. Because when we're talking about tactics and strategy, everything that we've discussed in terms of financialization, in terms of globalization, has been tactically very profitable for the United States, although not everybody in the United States. But we are now discovering that it's been devastating strategically, because here we're trying to supply Ukraine with, 152 millimeter shells, and we're running out of shells. Was last summer, or the summer before, there was an interview with, I think the CEO of Raytheon, who said, we can't decouple from China because we have, 1,000 suppliers in China. Well, I mean, how can you have a defense industry and a military that depends on components from your potential adversary? Like, what sense does that make? It makes no sense. So basically, you can't fight a war because you need chips from, or whatever. You need the motherboards from the people you're planning to fight. So I think that in geopolitical and sort of national security sense, the Trump administration is likely to pursue things that would surprise people. I don't know what those things would be. I don't know the context, but I think what they're saying in general is that their job is, or they see their job is rebuilding American independence in terms of manufacturing, and particularly defense manufacturing. Mm-hmm. That requires massive investment, massive expense. It is very inflationary. War is very inflationary. War buildup is very inflationary. And so I think people will be very surprised by what comes. Trump can no more fix fundamental problems and inconsistencies than Gorbachev, fix them painlessly, that Gorbachev could do it with the Soviet system. I mean, it's just not, there are facts on the ground, there are realities that cannot be simply done. And yes, there are many inconsistencies. They want to cut out $2 trillion out of the budget deficit, except when you look at it very carefully, you will see that most of the, if the government would just pay interest and entitlements, which require an act of Congress to change that, we're still running at a deficit. Mm-hmm. So they can cut the entire federal government, just all of it, close the whole thing down, and we would still be operating at a deficit. Now, how about that? Numbers just don't add up. That's the problem. The numbers don't add up. And it gets worse, right? Because now this year, $9 trillion of debt is supposed to roll or something like that. And of course, it was put on at like less than 1% or 2% interest rates. Well, okay, so that would explode the interest expense. Mm-hmm. So those are the kinds of realities that cannot be reconciled with long-term status quo remaining the way it is, which is not to say it's the end of the world, which is not to say we're all going to die. What it means is that there will be winners and there will be losers. Mm-hmm. There will be a lot of losers. Every dollar of debt is somebody's asset. You can't eliminate debt without people to whom it's owed losing money. Okay? That's just, there's no way around that. Mm-hmm. And so It's been coming for a long time, and it's closer now than it's been at any time in our life, and the stakes are higher than they've been at any time in our life. And so I don't know what 2025 would bring, but I think we should be prepared for being surprised. Maybe not in the positive way.
Mm-hmm.
Probably not in the positive way. In a lot of, I don't know if that answers your question.
Simon, do you think that the bond market is going to have a very important place to play in what the Trump administration is going to be able to accomplish and what it's not?
Again, I don't know, because bond vigilantes, they seem to be acting up, from the time whenever was the last cut. Long-term rates have not declined and maybe even increased a little bit. But again, I think it's important to not try to answer these questions, mm-hmm. because we don't know the answer. I mean, we can answer all the questions. We have no idea whether these are the right answers. Mm-hmm. And if somebody is building their future on, answers where we have no idea what is the validity of these answers, how accurate they are, and what kind of surprises can happen. Again, surprises can always happen. Mm-hmm. The question is, what's the probability, right? So given the amount of surprises we've seen in the past 12 months and are continuing to see, like on a daily basis almost, people, like you said, get sort of, they stop feeling it, right? They stop paying attention. But that's only until it affects them directly. That's really what it is, until it affects you directly. So the ability to plan contingencies and be prepared, the whole concept of preparedness and reserves and the culture of, Boy Scouts, knowing how to fix things and knowing how to survive in the woods. I mean, all those types of things. I'm just using that as an example. That's a mentality that comes from a feeling that the world is a dangerous place, and that whilst it's not expected that these things will happen, they can happen, and they do happen. I don't believe that in the financial sector there is that sense in the West. There is that sense outside the West. And that is why they have been accumulating gold reserves. And it is the most vivid demonstration of the power of a global market in something like confidence, you can call it, to overcome the US and Western preferences and worldview. And results speak to something else. See, that's really that's one of the biggest insights. Gold price indicates that people are worried. That's what it indicates, that there are people that are worried. The wealthy, the central banks around the world are concerned enough to have driven this price by 40%, which for a stable asset like gold is quite something. Okay, it's just over 25% this year alone. And for that to happen in the absence of any sort of real interest in the West, that tells us a lot. Mm-hmm. So somebody here is right and somebody here is wrong. And so it's up to your listeners to make the decision as to which side they feel the history is going to fall. But I would suggest it's not prudent to not listen to what the rest of the world is saying.
Or at least
particularly people who are playing strategically and wisely.
Mm-hmm. Simon, you wrote an article about the lack of real opportunities, real return opportunities in the world today. Do you think that starts to shift at some point, let's say over the medium term, to start to highlight gold and especially gold miners over this next, let's say, 3 to 5 year horizon?
Well, again, for people to understand that their returns are not real, something has to happen. So are people just going to turn around and start buying gold miners after forgetting them and leaving them for dead, basically, for the past few years. I don't know what the catalyst would be. But because, again, you see, and this is another important understanding, the reason the gold is up and the miners are not is because this is a different investor base. Gold miners is the investor base for gold miners, Western portfolio investors. The investor base for gold is global. Central banks, Asians, all over the place, all kinds of people. So the fact that gold miners have underperformed gold very much speaks to this dichotomy between where the confidence is and where the confidence isn't. Mm-hmm. Okay? And so I think it's all very correlated. To the extent that the Western investors are being overconfident, and non-Western investors who are driving, or investors and central banks, are being prudent and correct in their assessment of the risks, then, of course, gold and gold miners are supercharged. So I will repeat what I said before. The largest opportunities arise out of the largest gaps between consensus expectations and reality. So consensus expectations in the Western markets is that everything will continue as before. Yeah, this will be a little different, that will be a little different. The market may go up, the market may sell off, but then it will go back up. It's all business as usual. And my message is, it's not business as usual. Mm-hmm. Whatever happens this year or next year, the world has changed. The world in which we grew up and which we took for granted is changing before our eyes, objectively. And we are not seeing it. Or most people are not seeing it. Or either they see it, but they don't feel the implications. So implications usually get felt after everything has already happened, kind of. So it's like the implications are the last thing, right? It's like death is the outcome of cancer. It's not the leading indicator. You know what I mean? And so financial debacle is the end of profligacy. It's not the beginning of profligacy. Mm-hmm. So I think, yes, that moment will come. I don't know when it will come. And in that sense, insurance would pay off as it should, even more like the Big Short did, which, by the way, was a big long. It wasn't a big short. Everybody calls it a big short. Mm-hmm. It was a big long. They were long insurance. We were long insurance. Credit default swaps. It's an insurance contract that pays out on default. And so that's basically what I think we're dealing with here. I'm not saying the United States will default, but I'm saying the United States will default in some format. Mm-hmm. The choice of politicians usually has been to engineer inflation. Mm-hmm. That's the choice, because to trigger a collapse or to trigger a market crisis and a national crisis, national security crisis, proactively by politicians is a very unlikely situation. Mm-hmm. So they usually try to get out of it through debasing the money. They also try to get out of it by a combination of debasing the money and capital controls, so that once the money realizes that it's being debased and the purchasing power is being taken, people can't go anywhere. Now, I don't know if people noticed, like in the United Kingdom, there's a conversation about something called mandation. It's a weird word, but it's a very British sort of word. Mandation means that the pension funds will be mandated to buy British debt and British securities. Okay? That's capital controls. That's a form of capital controls. It's financial repression. So in the United States, we may very well see that pension funds guidelines, investment guidelines required to hold a certain percentage of government securities, regardless of whether these securities are providing real inflation-adjusted yield or not. Maybe some mutual funds, maybe 401ks, whatever. I'm not predicting these things. I have no idea. I'm just saying that's how it has been done throughout history. It has been done in the United States in the 1940s, when people were not allowed to invest in anything, were not allowed to own gold, and in the meantime, the government ran very high inflation during war, and a lot of wealth got destroyed. I mean, that's what happened. The same thing happened in the 70s. So I think we're up for this other cycle. I think our adversaries are not sleeping on the job. They're working very hard to undermine us. We are not sleeping on the job either. We're working very hard to undermine them. You can see that in what's happened in Syria just now, recently, and we can see it in other parts of the world. So it's a fight. It's a fight. So people need to understand that they're betting in a fight of matched adversaries with different strategic interests. And there's no ability for both sides to win. That's really the biggest issue. Somebody's going to have to give something up. I'm not saying somebody's going to have to lie in ruins. I'm saying somebody is going to have to say uncle. And I'm afraid we're going to have to say financially uncle at some point, because our financial path is not sustainable. Mathematically, philosophically, practically, it's just not. So we can't keep extracting value out of other people once they stop wishing to be extracted. That's, then you have to use military coercion. Then do you have what it takes? That's what the so-called Thucydides trap. Thucydides was a Greek historian who observed or postulated on the example of Athens versus Sparta that there's a propensity of conflicts between the rising power and the incumbent superpower to end in a war to settle their conflict. And so that's why the risk of war is very high. But the risk of war doesn't mean nuclear annihilation. There are many hybrid, but we are in the middle of a war. I mean, the world war is on. It's not a nuclear world war. It's not a kinetic world war. It's a hybrid world war. Trade, there are all these proxy wars in the Middle East, in Ukraine. They may expand. We don't know where that goes, but it's not a stable situation. It's a very unstable situation. So clearly, there's a difference in perception again between the West and the rest as to how stable or unstable the situation is, and that's where I believe the opportunities lie in being able to position for some level of disappointment on the Western side as to everything being just fine. It's probably not just fine. Doesn't mean it's the end of the world, but there's a big difference between the end of the world and not fine. So I don't think we're fine, but I don't think we're all going to die either. So that's kind of that's my take on that. So yes, when everything is bid up and nobody wants something, like gold and gold miners, I've made sort of my career in distressed assets, which is to say to buy things that nobody else wants or doesn't believe are worth anything. It's worked for me, and I think it's going to work for people this time again.
Yeah, when I think of all of the possible drivers or catalysts for the gold price, I think that this default that you mentioned of inflation is far more preferable than all-out war and major panic. Unfortunately, I think that's, of all the cards on the table, that's the most preferable one.
But remember, yes, but the inflation can turn into hyperinflation. The difference between inflation and hyperinflation is hyperinflation is a loss of confidence. And inflation undermines confidence in the currency. And sometimes, if it becomes very high and the situation in the world becomes destabilized, it's possible that there could be, I'm not saying there will be, but it could be hyperinflation. Russian Revolution came as a result of hyperinflation. That's political debacle. I mean, that's an internal political debacle. When people lose everything, they lose it. And so I wouldn't think this is a good outcome. It may be a better outcome if it can be contained. But subprime was not exactly contained as it turned out. And so whether inflation can be contained, that's the hope. And of course, in that case, gold and real assets would do extremely well.
Mhm.
But, you know, again, we shouldn't wish for any of this. We should just be prepared and pay close attention. That's my take on this. I've studied history long enough. I mean, these are very difficult transitions. We should be very humble. One should be extremely humble and very, very watchful, and not sleep on the job here. This is a time to pay very, very close attention, and be very careful. That's my advice.
Simon,
and have reserves.
With your studying of history, how do you think that competence and socialism are linked?
You mean inversely?
However you think they should be linked.
Socialism is the flip side of competence. Socialism is the yearning of humans. It always comes back because it's an unattainable desire for equality and equal outcomes, basically, that we're all humans, we're all inherently born the same, and therefore, equal, and therefore there should be equal outcomes. Unfortunately, that's not a natural state of human species. It just is. I know people have very strong ideological views about this, but I grew up in the socialist country. It doesn't work. Mm-hmm. It doesn't work, not because it didn't work in the Soviet Union. It has never worked anywhere, and it's not going to work. And the reason it doesn't work is very basic human nature. If you drop off any amount of people on an island or any kind of place, I'm not talking about survival situation, just project. Give 20 people, 30 people, 50 people, disparate people, get them together, give them a project, put them somewhere, come back later. There will be leaders and there will be followers. There will be people who would have done better, and there were people who wouldn't have done as well. That's just a natural state of humanity. We're all different. We all have different abilities, different level of competence, confidence, leadership skills. It's just the way it is. So whenever socialism shows up, it usually shows up when there's a tremendous wealth gap forms. And then people feel like that's unfair. It should be equalized. And that's where a lot of trouble happens. Because the only way to equalize it in the end is through force, because nobody's giving up their money without some fight. Mm-hmm. And so then the government has to be coercive. Then there have to be mandates for people to force people to do certain things, and that usually then results in social instability or leads to a totalitarian outcome, which is the only way to contain. So therefore, socialism, I think, is incompatible with competence because it tries to promote stability and equality, and to advance people based on their whether it's racial principles or whether it's some other attributes. In the original Marxism, it was based on their social origins, whether they're from workers, peasants, or from the middle class or upper class. Identify a group of the aggrieved and the group of the aggrievers, and then the aggrievers, deserve what they get, and the aggrieved need, compensation. This is a generic situation. I'm not specifically referring to any specific group. Mm-hmm. I'm just saying you can change the groups, but the constellation of these groups is always the same because the idea is the same, and the idea is compelling, particularly to people left behind, which is why it rises during periods of high inequality. But unfortunately, I really have convinced myself through study of history and personal experience with the system firsthand, it just doesn't work. It just doesn't work. Mm-hmm. It doesn't lean into human nature. It's ultimately against human nature. And so that's my answer.
Mm-hmm. Simon, I want to really thank you for sharing your thoughts with us, for not necessarily giving us answers, but giving us plenty of data points and counterpoints to think about and take into our analysis. So many times, like you said, I hope that answers your question. I don't know that we're able to actually, as you put, answer, come up with a concrete solution to any of these questions at this time. But, taking all of these pieces into account, I think, is extremely important. And I want to thank you for the time that you took to explain that to me and to our listeners. Is there anything that you'd like to leave them to think about?
I would reiterate what I said. I think the situation is very serious. I think people need to look at the facts very carefully. The outcomes are not entirely up to us. We are being challenged by matched adversaries, both on the battlefield and in the cyberspace, in outer space, in technological area, in a lot of many different ways, militarily, economically, currency-wise, and otherwise. And whether we can withstand all these challenges without suffering pain and consequences, I think is a very tall order, given history and the rise and fall of empires and whatever. I don't think the United States or any other country is about to slip under the waves. Life will continue, but financial, economic, political arrangements, geopolitical arrangements are in flux. And the outcome of how all these things will settle down are uncertain. And so I would encourage people to think of resiliency and go back to sort of first principles thinking for themselves, look at the situation, break down complexity into just pieces and say, does this really make sense? And if it doesn't really make sense, how long can this continue? And what should I do about it? And where would I be if it doesn't continue? What will happen to potentially asset values? What would happen to leverage? What would happen to liquidity? What would happen to institutions that rely on liquidity and rely on leverage? How is this all going to play out? And so that's the environment where people should be focusing on things that are tried and true and real, in a sense that they are not dependent on the leverage, on financial arrangements, maybe even property rights and political arrangement challenges that can come. And I think in that sense, my answer is gold, but they're obviously owning your own business, small business preferably, so that you have flexibility and you can do things, and other real assets, intangible assets, friends, family networks, all become much more important than they are at other times. Although they're always important, but they're much more critical. So that's my only advice here. And I do think that gold, that's a business I'm in, and I'm in this business not because my father left it to me. It's because I chose it after a career in financial investing, because I felt some of the things that I'm sharing with you for a number of years. I think it's something that is going to prove very useful to people, even though I'm not saying it's going to be very profitable, but it's going to prove very, very useful and very anchoring in a world that's a bit of unmoored. So that's my view.
Excellent, Simon. Of course, for those that want a thought-provoking and very interesting Twitter feed, at @S_Mikhailovich, Mikhailovich. And of course, all your articles and stuff are available at bullionreserve.com. Simon, thank you so much for your time today. Always a pleasure to speak with you.
Always a pleasure, Tom. Thank you.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.